Hi, my name is Kacper Różyński, and today I will share with you my point of view about venture capital markets. First of all, we are doing it in cooperation with IT technology cluster that already asked me some questions, and today I would love to share with you my knowledge and my experience from this market. Okay, first of all, my name is Kacper Różyński. I am Vice President of Pointer Capital. Pointer Capital is a venture capital company that investing in the startups from the area of blockchain, artificial intelligence, and the fintech. What's more, today we will shortly explain you about stages on which companies should focus on raising funding, because first of all, you're not forced to always raising money from venture capital companies. You are also able to do that from smaller investors, for example, business angels, and from even your clients, and just bootstrap your company. And the way are you earning money and how you're developing. What's more, there is also a business angels and crowdfunding, for example. So do not focus only on venture capital companies, but you have plenty of ways how to raise money to your businesses. Okay, first of all, stages, because at the beginning, it depends for the startups. We are as a fund mostly focused on pre-seed and seed rounds. It's typically used for idea validation and market research to determine if the startup is payable. Pre-seed investments generally range between 24K up to $500,000. Seed funding is the next step after pre-seed funding. It's generally used to develop a minimal viable product, MVP, also hire at the first step and build an initial user base. Seed investment typically range for $500,000 up to $2 million. Okay, first of all, private equity companies is when, for example, the venture capitals company mostly focus on early stage. The private equity is funding a little bit bigger companies, and it's mostly used to expand the startup, launch products and services, and scale the business. Private equity investment typically range from $2 million up to $50 million or even more. And then not all of the startups is forced to do an IPO, but this is also a way to exit for the investors. It may be also a solution even for your startup. IPO, initial public offering. So this is the process of selling shares of a private company to the public. So it's the first time that you're going to the public. It's often used as a way to generate large amounts of capital for a startup, but just to be clear, it's really risky and costly process. Okay, so also strongly recommend you to visit the Apple TV and watch the series We Crashed. Why I'm talking about that? Because it's explaining the way from the first place when there was the seed round, which took place in 2010, and we work as a company raised almost $2.5 million, and the valuation of that company was $5.5 million. So you can stop and check all of the details today of this screen, but we will just go directly to the fifth and the final phase. That was the Series E round, which took place in 2017, just 10 years later. They raised almost $4.5 billion with the company valuation at $20 billion. So there was plenty of the investors. There was a lot of money that they raised, and they plan to have an IPO at the valuation of $47 billion valuation. but WeWork almost collapsed, but strongly recommend you to see the series, because they will explain you a lot about fundraising money, how to cooperate with the VC funds, and that you need to be a superhero. Not always, but it helps when you're talking with the VC funds. IPO, WeWork almost collapsed. IPO didn't happen, but still, do you think that, of course, not every startups reach the IPO phase? What's more, Adam got a significant amount of the money after he was forced to leave WeWork, so he earned a lot of money. Do you think still find your place in the business after such a failure? Failure, for example, it was for the investors who already have lost money. But I will show you also an example that Adam Newman, the ex-founder of WeWork, gets a new bakers. WeWork's founder is back with a $1 billion venture, but not for the WeWork, but for his new startups. So when you have really good network and you're able to do business well, you will always find another investors. I hope this time the investors will earn really good return of investment on this case. Okay, I will just shortly also explain you investor mentality. The investor has a vested interest in the success of the idea. The founder of the idea counts as the leader of the team. Just remember that for the VC funds, the main factor in the company that matters is the team, because you were able to have a great ideas, great plans, but only this execution of these plans matters. And if you are going to raise money, just remember to put into your pitch deck, I will explain you later, a really good explanation why your team will, even when a lot of problems will face, you will face as a team, you're able to do that. If the investor is a business angels, an emotional relationship emerge. What's more, investor mentality. It was like that out of the 10 investments, only one or two pay off. So it means must earn the rest. So for example, if the 9 investments collapse, one needs to do at least 1,000% to pay off the rest, at least, but they want to also earn from these investments. For example, our fund has a goal to invest only in the startup that has a potential to minimum 50x of investment, return of investments. What's more, what does the investor expect? First of all, a solid team behind the project. Always the most important thing, all of the funds always is explaining that the main factor that they are caring about when they are investing in the startup is a team. So when you're preparing a pitch deck, always remember to have a really good slide about your team with the presentation, why your team will succeed with this idea. What kind of the experience you have, what kind of the knowledge you have, and what is the connection between you. If you already cooperate each other, if you fail, it's okay also, but if you succeed, it's also okay, but it shows that you're able to cooperate with each other. What's more, clear definition of the financial resources needed. Attractive multiply for my fund is 50x return of the investment. The scale of the investment large enough to justify the commitment of their time. Because, for example, if the problem is not big enough and you're not able to attractive investor with the multiply return of the investment, they will not commit their time. What's more, clearly defined timing and exit strategy, business that is scalable, reputable, and profitable. What's more, how to get a deal with the investors. Refine your business model. Be confident. Always remember to be confident, but don't pretend to know everything. Prepare reliable and credible financial calculations. Do not agree to take over more than 49% of the shares, because always remember that when you want to plan next rounds, just remember that your investor will be not motivated if they will see that somebody has so much impact on the company, and there will be problem with the thing called broken cap table. So always remember, do not sell too much shares of your company, mostly on the early stage. Do not agree also investing to taking on the role of the CEO. Investors and the VC fund should be your partner, should help you, but it's not their duty to manage the company. Mistakes in the speeches to the investors, for sure, once again, overconfidence, use of professional vocabulary. Remember, when you're pitching, always remember to have the presentation like everybody is able to get to know what do you say in this presentation, what are you telling to your audience. Just telling like to the 7-year-old child. Lack of solid customer recognition, unrealistic financial estimation, lack of energy and strength, basing business on the competence of only one person. We as a fund only investing in a startup that has at least 2 full-time founders. Pitch deck must have, for sure, a memorable introduction. Set the stage for your pitch by summarizing the problem you're trying to solve and demonstrating how your solution is superior. Next, really, really important thing, a solid business model. Demonstrate that your business is suitable, sustainable, and explain what sets your product or the service apart from the competition. What's more, showcase the team, highlight the unique skills, qualification, and experience of the team that will be executing the plan. Once again, not only that you're super, but also show the investors how are you going to be executing the plan. It's super important. Include supporting documents, provide the financial reports. Of course, you're not able to put all of the details to all of the Excels into the pitch deck, but if your investor would love to ask about that, just be prepared for that. Customer feedback and other relevant documents that can help strengthen your claim. Define the market opportunity. Clearly articulate the size and scope of the market you intend to target and explain why you are well positioned to capture that. Explain the financial layout of the roadmap for profitability, including a breakdown of expenses, revenue projections, and other financial projections. Outline your strategy. Just remember to describe how the marketing will work. Describe the marketing and sales strategies you will use to acquire customers and increase the revenue, because it's going to be really important just to show the way that you're thinking how to do that. What's more, plan for the future. Show the investor that you're in it for the long time, from the long game. Explain the plans and long-term growth strategy. Also show that you have skin in the game, that you're putting money, that you're putting your time, because it's crucial for the investors as well. What's more, answer questions, anticipate and address any questions or objections that the investor may have about your business. Just prepare yourself, just your friends, your co-workers, to ask you questions and be prepared to all of the objections that they may have. What's more, close on a high note. Rate foreigners the value of the product or services, and thanks to the investor for the time and consideration. That's all. Really short explanation, a pitch deck, but it's crucial, and I'm pretty sure that it may be okay. So here you have basic questions from VC that you may get. Who are your investors so far? What are your plans for exit? How do you exit your businesses? What is the valuation pre-pass money? What was the valuation of previous rounds? What is the predicted valuation in the next 2 rounds? What is the predicted size of the next round? Who are your clients? And how much money do you need to break even? What's more, how many cash do you have in your hands? And always remember that it's really important to show the investor skin in the game. And just remember, stay hungry, stay foolish. Thank you, Kacper Różyński.